Good afternoon, and thank you for joining us today. I'm Taylor Convolucier, a mining analyst at Red Cloud Securities. Today's webinar focuses on Kutcho Copper Corp, which is a Canadian resource development company focused on expanding and developing its Kutcho high-grade copper zinc project in northern British Columbia. It's focused on completing an updated feasibility study for the project, which is expected in Q4 this year. Kutcho Copper recently announced some highlights of the project optimizations that are expected to be incorporated into the updated economic study. Highlights include a new open pit mining scenario for the majority of the main deposit, a new mineral resource estimate totaling 1.1 billion pounds of copper equivalent M&I, along with the introduction of ore sorting, improved recoveries, and environmental enhancements. Today, I have with me on the webinar Vince Soros, President and CEO at Kutcho Copper. The format of today's webinar will be comprised of two parts. In the first part, Vince will go over the Kutcho Copper story, as well as provide an update on recent developments and what investors have to look forward to in the coming months as it completes that feasibility study and advances the project. In the second part, we'll take your questions live. So please send your questions in using the chat box, and we'll get to as many as we can. And I'll note you can type them in at any point throughout the presentation. To start, we'll handle the disclosures, and then I'll hand it over to Vince. So for Kutcho Copper, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Kutcho Copper corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Kutcho Copper specific disclosures. And with that, I'll hand it over to Vince to update you on the company and what you have to look forward to.
Thank you, Taylor, and thank you everybody for attending this webinar. I will walk you through the Kutcho presentation here. I will skim through some of this. We did a full updated webinar, which was recorded. And for the sake of those of you who saw that, you can watch that again. And I'm going to focus this webinar a little more on the updates since then, as they have been I guess important and critical to the companies and the recent efforts with the company moving forward. But for those of you who are new to the story, Kutcho Copper is an advanced staged high-grade copper zinc project in northern British Columbia. There was a PFS done on this project back in 2017 when we acquired it from Capstone. We completed a $100 million financing package with Wheaton Precious Metals back at the end of 2017 to complete that acquisition. And essentially since then have been driving this project through feasibility study, permitting, and ultimately what we believe will be a construction or a development decision. A little bit about the team here. This team was selected and put together, for the opportunity at hand with Kutcho. A lot of very good technical experience with respect to VMSs and the work that was required to advance this project, as well as on the engineering side to help us through the feasibility study. A lot of capital markets experience. And notably on the board, Stephen Quinn, who used to own this asset through Sherwood Copper, and Bill Bennett, who was the ex-BC Mines Minister. So again, expertise in taking this through the next phase of its life cycle. We've a little bit on our cap table here. We've got just under 100 million shares issued. So I would suggest a very good capital structure still intact. We've got some significant ownership, Capstone at around 10%, Wheaton Precious at around 7.5%. So a good, strong cap table moving forward. A little bit about the Wheaton financing package. They got involved in a number of different levels, from a streaming arrangement we did with them, which was only on the precious metal component of the project, which represented less than 8% of the revenue of the project, so did not encumber the primary commodities, copper and zinc. They participated in the equity round that we did back in 2017 to the tune of $4 million, and they also provided us with a $20 million convertible debenture, which helped us with the acquisition of the asset, which we paid $28 million Canadian for. So Wheaton's been a great partner through this. They definitely, they've put up a lot of money. They like the asset and are working closely with us to move this forward. Quickly, we're in a very development-friendly region of British Columbia. Lots of other existing projects in development, in construction, in production. So a really good part of BC. We're a very accessible project. It is remote, but not that remote. The most remote thing about this is that we will be still running LNG and diesel for our power generation. We've done trade-off studies to run grid line. Doesn't make economic sense, but we've got accessibility to the site through currently it's a 100 kilometer long ground access, which will be upgraded to a haul road. We've got port facilities nearby with the Port of Stewart to ship our concentrates from. We've got an existing field camp on site, airstrip on site, and a very, very subtle terrain to work with. We're not cutting through either for road building or mine building big hills. We're in a valley with subtle rolling hills. Just a note on this, where Kutcho, where the formation resides, this is the Kutcho formation. They're prospective volcanic rocks that basically reside through our entire claim position. I'll talk more about this with respect to the exploration upside potential. Just for now, you can note that the Kutcho deposit, or the three deposits, if you will, reside on in this formation on one of the existing folds that repeat themselves throughout the project. Our resources reside within three main lenses, the main lens, the Sumac lens, and the Esso lens. The main lens outcrops at surface. The Sumac lens is a little bit deeper to the west, and then Esso, the deepest lens, further to the west of that. The resources, the M&I category is all of main and all of Esso. Sumac resides within the inferred category. And a little bit on our updated resource that we recently published. This was last week. As you can see, we've got M&I sitting just below 23 million tons at about 2.26% copper equivalent. So, I would consider this a very, high grade asset, high grade project, which will, we believe, and has evidence in the past, lead to some robust margins and some leeway, highly leveraged on copper to the upside and leeway to copper prices on the downside for this asset. With respect to the pre-feasibility study economics, we're expecting our feasibility study here soon, so I wouldn't pay too much attention to this, as it's going to change significantly with respect to production rate, with respect to mine life. Our recoveries have changed through a very robust metallurgical program that we completed last year. So, what to pay attention to here is the robustness of the project. For this pre-feasibility study, you see a low capital intensive, high margin asset, and we are hoping to continue that trend into the feasibility study. You also note here that this was priced at $2.75 copper, and copper prices are a lot higher today. With respect to the concentrate, for those, we'll just mention that we've got a very, very good concentrate, a very clean concentrate. We don't have any of the nasties in penalty limits, which include things like arsenic, etc. So, we believe this will be a very sought after concentrate in the markets. With respect to our environmental and permitting, we filed our Section 11. So for all intents and purposes, within the process, we're at or through the first gate. That's where we paused about a year and a half ago, and just recently have now begun to advance those efforts and move through this process to its entirety. You will see that we put out a press release, I guess, a couple of weeks ago now, that we have engaged and commenced negotiations with our two First Nations partners, and those are Casca and Tahltan. the project resides in an overlap territory. So economic participation agreement negotiations, we're moving that forward, and that's a real blessing for the project. These two First Nations in this part of British Columbia, where there's lots of activity with respect to mine development and operating mines. They're very, very pro-mining First Nations. We've worked exceptionally well with them, and they're looking forward to us advancing this project. A little bit about where we're at in scheduling. So essentially on the feasibility study, which is going to be a key document, a key de-risk point for this project, and a driver, I think, with respect to valuations moving forward. I'm expecting us to get a re-rate in our valuations based on this document. We're looking basically at the end of October-ish for this to be complete and posted. And as mentioned, we are now moving full speed through our permitting process. And that strategy continues to get this done as quickly as possible. A little bit about the upside potential, and this is very important. We talked about that where our resource resides. So with respect to near resource upside potential, you've got, now that we've moved towards this, and I'll pause here and talk a little bit about this. With the press release that we put out a couple of weeks ago, we have moved towards open pitting the main lens. And, for the project has typically, and since we've had it, we've messaged underground mining for all of these lenses. We made a significant pivot, and it was back in February or March as we were moving through the feasibility study, looked at the some economic trade-off studies, and more importantly, talked to the bodies at hand, our First Nations partners, regulatory bodies, about the potential to open pit main and our thoughts and ideas around that in mitigation efforts, etc. And it was from that perspective, as long as we go through the right processes and manage this properly, it was green lighted. So we decided to go down that path and to complete the feasibility study with respect to main being an open pit. Main lens being the biggest lens out of the two that are being contemplated in the feasibility study, and there's significant differences in costs with respect to mining when you go from open pit to underground. So we expect that to translate through to the economic benefits of the project. And so with that, we've identified and we've been sitting with the teams identifying additional exploration upside potential, near resource, if you will. And the main lens, now what we're looking at is how can we potentially expand the pit. You'll see this broken down in the legend here. There's pit expansion potential to the east and expanding that pit shell. There's a very interesting opportunity between the main and sumac lens, which has had one drill hole historically put into that main sumac gap. So we're interested in seeing if there is potential pit expansion and underground expansion between the two lenses. The sumac lens is entirely an inferred category right now. That's about 9 million tons, grading at about 1.5% copper. So the sumac lens provides incredible opportunity. That would be an extension of mine life. That won't make the feasibility study, but we do think there's lots of opportunity there to convert those resources and ultimately extend mine life of the project. In addition, the main lens and the SO lens are open down dip. With respect to a more blue sky potential of the asset, there's been no significant exploration done on this property since 1990. And as I referred to that earlier geological slide, the host rocks encompass our entire claim block, but that Kutcho formation or that sulfide horizon repeats and folds itself multiple times throughout the Kutcho assemblage. And you can see where the SO, sumac, and main deposits reside. But we've identified 5 high priority targets that we've worked up and that we will be exploring here aggressively in the coming future that reside within, and it is those hash marks that indicate the massive sulfide horizons that repeat themselves, and that these targets, provide opportunity. As we've seen in the past, VMS districts, they tend to repeat. The deposits tend to repeat. You tend to find more. And and these are really regional or district scale opportunities that we're excited to advance in the coming year. So upcoming catalysts. Again, we've got our feasibility study coming here, anticipated around the end of October. So that's only a very short time away. We're going to have, we'll be driving through the permitting process. So we'll have a number of permitting milestones, which will continue to de-risk and I believe re-rate, the company and the share price. And then, we're putting pen to paper now on a big exploration program in the coming year. This slide basically in summary, Kutcho Copper, we believe is on a clear path to completion of feasibility study, permitting, and ultimately to production. Thank you, everybody. And if anyone has any questions, please feel free.
Great. Thanks a lot, Vince. So now we'll turn to the Q&A portion of the webinar. Just a reminder to everybody on the line that you can type in your questions at any time to the chat box. So to start off, maybe just one question is right now, I guess, what is your current cash position, and are you funded to start that development process once the feasibility comes out?
We are funded through feasibility. And I've got some, so yeah, we're funded to get this feasibility study out. And that was always my intention in the capital raises that I've done recently, is to get us through feasibility study with some buffer in addition to that. So we are fine on cash. And at some point in the future, you will see me do something on the capital side. I think it should be at much higher prices, and I think the feasibility study will help that re-rate. And then you may see me do something, more strategic with respect to capital and involvement of parties that will help drive this forward. Okay,
and I guess I don't know if that answers the kind of follow-up question with that. It's kind of how would eventual, I guess, construction be financed? Is that kind of that strategic component potentially?
Construction can be financed through a number of avenues. Yes, it can be a strategic component. It can be also, this streaming arrangement we did with Wheaton. That's another strategic piece. I mean, that was a $65 million US streaming arrangement on the precious metals, and that money goes towards development capital. So we spent some of it. There's about 58 million US dollars, whatever that translates into today, 75 million Canadian dollars. That's cash that goes towards development capital. And then there'll be a number of scenarios that play out in the years to come. It's not going to be today, but in the years to come, where it's, projects are typically funded via a combination of debt and equity. And, that'll be something, and a decision that gets made in the future.
Right. Perfect. Okay, another question we had come in, just one person wondering, I guess, what the strip ratio is for the project.
Strip ratio, we'll put out some more details to this. Well, all the details will be put out in the announcement, but I mean, I think I can safely say that the strip ratio on this will be something less than 6 to 1. We're probably going to reside around, 5.5 to 1, something like that will be the strip ratio on Main.
Okay. Another question is, with regards to the metallurgical recoveries, and just wondering kind of what the variability is, if there's a big variability between the different zones of the project.
We've put out, and sorry, I have to go back now at this point and reference the specifics. Yes, there is variability between the lenses between Main and Esso. And you can see that in the table in our presentation as well as previous press releases. And that's because the grade's significantly different between the lenses. And that grade and other mineralogical components embedded in these lenses affects recovery rate. So you'll see that ESSO is a much higher grade lens than main and has better recoveries than main. And so how we plan on sequencing all of that. And I'm not taking away from main. We still did achieve very, very good recoveries. It's just ESSO's better. Main will be first into production, and then we will be driving development very, very quickly down to ESSO. And given that the grade component of ESSO, we want to get that kind of blended with main and into the mill as quickly as possible, and to bring that opportunity forward into the NPV calculations and the value of the project calculations. So yes, there was difference between main and ESSO. And what I can say comfortably is that that metallurgical program, we spent a lot of time. It's been completely revamped, turned on its head entirely from what was done in the past with previous owners, and it's a completely different process. And it was worked on intensely with some phenomenal organizations like BaseMet Labs and with Wheaton's technical team. Wheaton's got some individuals there that are incredible at this kind of stuff. And one of their chief technical guys is a metallurgical engineer. So we really took our time and developed a process and a reagent scheme that is solid. And I'll tell you that it has already passed feasibility study rigor. So we're very comfortable with that aspect of the project at this point in its cycle.
Great. And was there any bulk sampling done as part of that metallurgical program?
Yes, I believe there was.
Okay. So another question we have, just wondering with the updated resource that you put out, was the increase in copper equivalent resources a result of just that change in the mining method, or was there any additional drilling included?
Changing mining methodology and being able to lower the cutoff grade because of that and the costs. Right. We haven't added any additional drilling yet. That will be coming in the new year.
Okay. And then I guess kind of on that theme with the exploration that you mentioned, obviously drilling next year. I guess looking forward to really unravel the potential here is the idea to really demonstrate the feasibility of this with the upcoming study, and then get it into production and support a lot more exploration from cash flow down the road. Is that kind of the overall?
I think that will be some of it, but I think we're going to try to try to show that through exploration earlier.
Okay.
Probably in the coming year, and there may be opportunity to make modifications through the permitting process, and maybe potentially adjust as we move forward, depending on where it is, what it looks like, the low hanging fruit, whether it may be potential pit expansion, things like that. So it'll be it's yet to be determined. We're working on that now, but I think there's a lot of opportunities that exist within that. With respect to something like sumac that I mentioned, we can drill that out. Development's going to go from main right across, literally in front of the sumac lens down to ESSO. So, with respect to sumac, that would be something that we would, spend some time drilling out, trying to convert a bunch of that inferred into M&I. And that would be something that would be dealt with down the road. But that would be, again, as I suggested, it's a little bit lower grade on average. But that would be something that would be nicely tacked on to, years of mine life at the end of main and ESSO being mined. But, if we can prove out that potential, that's just value, added to us, and value to the project and the company that, may translate into something that happens in the future, whether it's, something we use for M&A or et cetera.
Great. Okay. Excellent. Another question just came in. I guess you'll have to refer to the previous PFS. But in which year would underground mining start after the open pit?
Details will be coming out in the feasibility study, so we'll have all of that, but around year 3.
Kind of a follow-up on that. Again, probably have to wait, but 1 or 2 shafts built for underground mining.
Yeah, the details in all this will be, we will put out with the feasibility study. We'll have, extensive information that we'll put out when we announce all the details with respect to the feasibility study, and we'll make available, everything from, mine, the layouts of the facilities, et cetera, all those nice things we'll have out there for everybody to see.
Yeah. Okay, switching to the access to the project, you mentioned the airstrip. Is that big enough to have commercial planes come in to serve, or larger planes to bring in workers for potential mining?
Yes. That's primarily how we would be transporting people. The airstrip's been there. It's been used for a long time. I mean, my site visits, we've used the airstrip. The access road right now is it's used by I guess people to haul some pretty heavy equipment there if required. But no, most of our activities on site, we utilize the airstrip. But as I mentioned, that access road will be upgraded to a haul road for the feasibility study. That's where the concentrate will be hauled from, or via that access road onto the highway, which is then trucked down the highway to the Port of Stewart. Okay,
great. And that port, I guess, is it's good to go for bringing ships for concentrate and everything. There's no.
The Port of Stewart is very active and currently acts as a hub for concentrate shipment.
Perfect. Okay. Let's see here. I think we've covered most of the questions that have come in. Maybe just before we wrap up, if you could kind of again summarize the key catalysts and things for investors to watch before we wrap up.
Sure. There will be some updates coming, over the next couple of weeks on some additional activities that we're pursuing. But I think the primary one, obviously, will be this feasibility study, and I can't really say enough about how significant this is for this asset. This project's been around a long time. It's been through multiple parties' hands. It's never made it to this point. It's had question marks, and really those were just corporate events when it started its life in the early 2000s with a junior who then got acquired by Sherwood Copper, and it was meant to be put into production by Stephen Quinn, and then Sherwood merged with Capstone, and it got shelved by Capstone because Capstone wanted to take bigger bites out of the industry and go acquire Pinto Valley and Santo Domingo. And then it was acquired by us. So this has always been, I guess, a notable asset, and I believe this will be the first time that this asset will be put in its best light. So I believe this is also an asset that will be in production one day, and I don't believe there are a lot of assets like this out there residing in the world. To give this opportunity to people to get this close to a project that's got huge leverage on copper prices, and that will be one that makes it to the finish line here in the coming few years. So that's a big one, as well as, again, I think all of our activities in the coming year will be showing additional upside potential and continue to add value to the project.
Excellent. So with that, I would like to thank Vince from Kutcho Copper for taking the time to host this webinar today with Red Cloud Securities. I encourage everybody on the line to keep their eyes out for this feasibility coming in the near term. I think it'll answer a lot of the questions that we weren't able to fully dive into today. And I look forward to seeing it as well. So thank you very much for everybody tuning in with us today.
Thank you.